Okay, good morning, guys. This is Ray from nextforextrade.com. Today is Thursday, the 3rd of October 2019, and the time is just gone 10:25 a.m. UK time. So let's crack on. Let's see what's going on in the market. And again, if you do find these videos useful, don't forget to give a thumbs up. It really means a lot to me. So yeah, let's have a look at what's gone on. So yesterday, it's talked extensively about these positions that I was in on the CHF JPY. These have come through in profit. So yeah, that's about 340 after comms and swaps, about 350 in profit. And yeah, we'll have a look at that a bit later. I've got another one in as well, GBP CHF. This is currently running a profit. I discussed just prior to entry yesterday, that in yesterday's video. So we'll look over that as well. And we'll just cycle through the market as normal. So let's kick off as usual. I'll just give a quick overview of how strategy works. This is a trend-based strategy. Ugh, can't even speak this morning. Trend-based strategy based on time frame correlation. So we are looking firstly for signs of trend in the higher time frame, the daily. So in a downtrend, lower highs, lower lows. In an uptrend, the reverse, higher highs and higher lows. And we're essentially looking for the price in a downtrend to be overbought and in an uptrend for it to be oversold. So we determine that, or I determine that based on using a standard deviation and what the price action is doing as well. So I would put a standard deviation, a channel around the price, and when the price is in its upper edge, nearer the upper edge or in the upper half here, then it's a indication the price could be overbought and has a tendency to move lower. In an uptrend, it's the reverse of that. So let's just have a look at something that's trending up at the moment. Ooh. So this is an example of something that's trending up. We'll come to this a bit later because this is a trade that I'm in. And you can see we've got higher highs, higher lows. And when it's in this lower area here, then this is a time when it's oversold and has a likelihood of moving much higher. So yeah, first thing we're doing is looking on the daily chart for signs of trending, signs of the price being overbought or oversold. Then we look to the lower time frames for time frame agreements. So on my setup, I use a 4 hour, 1 hour, 15-minute, and 5 to some extent as well. And basically looking for those time frames to be saying a very similar thing to the higher time frame. So if this is saying downtrend, then these should be saying down as well. Yep, that's the basis of it. So let's crack on. Let's have a look at the AUD CAD first of all, as usual. So clearly we've got a downtrend here still. Time is not great to sell this though because of the way the price is currently. It needs to pull back and find a bit more value for money. So nearer to the top edge of this standard deviation, creating a new lower high would allow for a potential entry. At the moment, this is just too overextended, too near its previous lowest low. So we want to get in when the price has produced a new higher low, at lower high, I should say, and look for signs of reversal when that occurs. So no, that's not a trade for today. This here is, what's that doing there? This here is the AUD CHF. Again, signs of bearishness here. 4 hourly. So this 4 hourly move here, quite bearish, which is basically this move on the daily. Now, would I trade this? Just thinking. I mean, there's some decent scope in this actually. I'm obviously in a position already, and I'm not looking to open new positions, especially as this one crosses with the Swiss franc, which I'm already in here. So there'd be no point in doing that because I would be, excuse me, I would be increasing my exposure on the GBP Swiss, and in fact I'd be long on this on it here, and this here would be a potential short. So potentially I could be kind of negating my position, but Would I short this if I wasn't already in a position? Okay, this is the way I would structure it. If I was looking at this from fresh and looking to enter new positions, I'll be looking at this here as the previous lower high in the daily trend. So in this move here, this is the lower high. So it's interacted more or less with our upper edge of our standard deviation. It hasn't exactly touched it, but it's giving some reference point. In addition, we can see that this previous resistance that we're deeming from this previous lower high has also found some support in the price there. Let's see if it goes back. Yep. Okay, so this goes back to these kinds of levels here. Here it's kind of zonal. So there's some good enough reason to consider the price may have some trouble moving much higher than this this peak, if you like, previously. So the 4 hourly, this lower high here is the same as this one here. So this is where we're looking to have our stop loss. Come on. So we're looking to have a stop loss above there. And the bearishness on both the 4 hourly and the hourly are looking reasonably good. So I would, if I were to enter this, I'd be thinking a risk of somewhere between 0.5% to 1%. I'm just not fully confident of where the daily is at the moment, because really it's better to enter based on a reversal candle that's interacted with resistance. Here, this is still a bullish candle. There's still, it's not technically a bullish candle, there's still bullishness in the move. I would prefer to be shorting based on a reversal candle that's hit resistance. This isn't doing that. So for example, this here is an example of what I'm talking about. It's come up, it's hit resistance of previous level here, as well as our standard deviation, and the price then moved lower. This here isn't as optimum. So I'm not willing to risk as much in this, or, you know, I'm just aware of the risk if I were going to risk more. So here I'd be thinking 0.5% in terms of risk. Stop loss above this level, so this level here. This would make the 1-to-1 reward to risk 66. So yeah, it stacks quite nicely. I mean, it comes, the 1-to-1 reward to risk will take you to about these lows here, or these lows here. So it's bang on support of the previous low, which, you know, isn't great, but at least it's not beyond it. But this would stack in terms of a 1-to-1 reward to risk. Of course, the bigger profit potential are these lows here. So if the price were to break these previous lows and move lower, and you wanted to keep this position in, then of course there's always the opportunity to scale into this as the price starts to move lower and breaks those support, and we've got better confirmation of the price moving lower. So there is scope to get in on this early, if you like. It's a slightly aggressive trade with a with where the stop loss would be in the timing of it, which is why I would suggest only 0.5% on this. But certainly if the price were to break these previous lows here, that would be a much better sign of that bearishness that we're seeing in the daily continuing, and you know, waiting for that to break and then pull back. You could either enter a new position, or if holding this one, add it in to that. So increase the position size, going for profits, you know, around these lows here. Would be the next kind of area that I'd anticipate the price could find some contention. So yeah, AUD, CHF, slightly aggressive trade, but it's tradable, definitely tradable. So yep. So AUD, JPY, no, I wouldn't trade this. It's just a little bit too far gone. The 4 hourly as well is not as optimum. You can see it's in a downtrend. You want it to be up here. Get rid of that. Up here in the kind of overbought area. This is just too far extended. So this needs to find a bit more value for money, pull back and see some reversals off of resistance here to warrant the potential to short that. So I would pass on that. And looks like there's a few people. Okay, so hang on, there's a question here. Still not working on AUD CHF, you know, my car. So Prince Philip OG is asking, still not worth pulling the trigger on AUD CHF, even though it might be counter to your other trade. Yeah, sorry, I've just seen your message there, so that might have been before me explaining Yeah, so hopefully you've got an overview of how you might trade that now. It does look, I don't know which way the market's going to go, and I wouldn't enter this because I've already got this position open here, but I do see potential in this to move lower, and that description I just gave should give you an idea of how you could trade that if you wanted to. So often it's just about it's not always about getting the direction right. It's just about managing the risk around it. So regardless of what direction it goes in, you've protected your capital either way. Hope that makes sense. So AEDJPY again, yeah, just explain that. So that's a bit too late in its move. So AED overall, lots of bearishness, lower lows, lower highs, fits nicely within our standard deviation, but you'd be selling into this support if you wanted to go short now. Even yesterday, you saw that it's given a kind of reversal candle and starting to pull back, which is good because we want it to pull back and find some value to potentially short on this. But right now, I wouldn't want to short this simply because you'd be selling into that support rather than selling off of resistance. And this is a point as well why I'd prefer to take my profits before the previous lows. I keep saying this over and over in previous videos, but basically when the price approaches the previous lows, it has a tendency to find support and then pull back and then break and move lower. So if you've positioned yourself so that you've taken your entry around the lower high, you look to get in when the prices pull back and it would deem it as a lower high, then taking money off before this previous low, or taking everything off or some of the position off, it's just a much more probable trade. You don't have to have the price break and make new lows. It can find support, it can break whatever, but if you've ended up here, on a 1-to-1 trade, you would have made your money. You possibly got 2 to 3 to 1 inside the trade, and you don't need the price to really break and make new lows to profit from it. So yes, at the moment, ADUSD, no, pass on that. It's just too far gone. Needs some value for money. So this is CAD CHF. No, very sideways market, very choppy. I would not be looking to trade that right now. So pass. So CAD JPY, what's going on here? What bearish on this overall. So this is nice and bearish movement, lower highs, lower lows, fits within our standard deviation as well. We can see it's found resistance off of that as well. It looks like it's broken out of this. So this would have been a worry previously, this bearish type of move here in the standard deviation. But in yesterday's candle, we can see it broke through that. So that gives a bit more indication that bearishness could continue. But the problem here is this is just a little bit too far gone at the moment. The most sensible technical level for a stop loss would be above these previous highs. But if you project where your take profit will be based on a 1-to-1 reward to risk, 150, it's going to be around these lows. And I mean, it still makes sense in terms of, taking money off the table before it reaching this level. So on a 1-to-1. But for me, it would just need to find it would be much better value for money if it were to be nearer the upper edge of our standard deviation. At the moment, it's coming towards the average or the mean of our standard deviation, so it could find support and move back. So really, the better value for money is up here, seeing the reversals off of this type of level, and obviously seeing that it's kind of illustrated in the lower time frames as well. So lower lows and lower highs at the moment are 4-hourly, hourly. They're a bit choppy, they're a bit sideways, definitely breaking price structure. So this was kind of higher highs, higher lows, and it's broken through that when it broke through this previous higher low and moved down, but it's just not as readable as some of the other charts. And readability is really what helps you manage a trade. If you can read what the price action is doing, you can position yourself better and make a more likely profit. So pass on that one. Let's see what else we've got. So CHF JPY, this is the one that I took profit on. So this is the perfect example of why I like to take profits off before previous low. So let's see if I can add on my entries on this. Okay, so my initial entry on this was at this level, and my exit was around this level. So this is why I like to position myself. This is kind of textbook on what I'm talking about, right? So we've got lower lows and lower highs. In fact, let me blow this up. So in the daily, we've got this these highs here are getting lower, these lows are getting lower, and we've got the standard deviation around the channel. So that gives us an indication that this is the trend that we're trying to work off. So my entry was more or less at this level here. So this was based on the daily, first of all, seeing reversals off of this standard deviation. Of course, we wouldn't have had that much information then. It would have been here, because the standard deviation, of course, changes as the new price comes in. But that would have been a decent sign of reversal, seeing there, and the price moving away. So that would have been enough sign to look to the lower time frames, to look for the bearishness on there. But you can see where I was looking to take the profit was before this previous low here. Right, so although my risk on this would have been £100 from this first position, this stacked up so that basically this came through at what, 223 plus some, you know, extra that was made from the swaps. Minus the swaps. So it's about 220. So that's just over 2.2. Well, it's 2.2 to 1 in terms of reward to risk. So that stacks up. If you look for those trades where you've got, you know, sensible positioning and the scope to make more than than you're risking, then, you know, enough of that's good trading. Also, what I've done is scaled into this. So you can see I've got another position here that hit take profit. So I added to this as the price started to progress on the lower time frames and show me the price action that I wanted. So lower lows and lower highs. This enabled me to add to that position that I already had, and overall risk 2%, but, you know, make a gain of, what's that, 340 or so. So yeah, that's a textbook trade that I like. So look for stuff like that. Look for the pullback. Be patient. Wait for the pullback. It just allows you to have a more sensible stop above resistance, above a lower high, and look for the scope to be in terms of profit as well. So this is definitely not one I'd be looking to add to now or open any new positions. This one is done for me. This needs to be finding some value for money by pulling back for now. So given this is, you know, the beginning of the month, I would anticipate it's probably going to be a few weeks before that's even tradable again, if at all. So Euro AUD, clear bullishness in this, higher highs, higher lows. I mean, I'm just jumped straight to what the 4-hourly saying, really. So it's vindicated for me in the higher time frame. We've got a reference point for the stop loss below this previous higher low here. So really, it's just looking for how to enter on the lower time frames. At the minute on the 4-hourly, we see in this move here on the daily is this move here on the 4-hourly. So this is bullish, but it's too expensive. And by expensive, I mean it's too overbought. And when we're trying to buy the market, we need the prices to be oversold first of all. So this needs to come back, find some value for money, be more of a bargain in terms of the price. So find support off the lower edge of the standard deviation. I would anticipate as well, the way this is looking, it'll probably find support if it does pull back off of these type of levels, right? So if that were to come back, see some reversal candles off of this, then it'll be looking to go long as the price moves past the high of that reversal candle that finds support, and obviously looking for that to be echoed in these lower time frames as well. So higher highs, higher lows, standard deviations from the low to the high. Come on, standard deviation from low to high like this as well on these lower time frames would allow for an entry. So yeah, this is the 4-hourly. So again, that's what we on Wednesday. So if that were to happen, you know, probably tomorrow or the day after, before that's likely. But yeah, it's one to keep an eye out on. Euro CAD. Sorry, just flicking between screens here. I've only still got one screen set up. So Euro CAD, yeah, this is looking interesting. Not quite ready yet, but this has potential. I think I was short on this a few days ago as well. Just clean this up a bit. So we've got this bearishness here. It's always worth popping out just to get a bigger picture in terms of what the price action's doing, just in case you're looking at this too much in isolation. But basically, we've got lower highs, lower lows in this move here. We've got standard deviation around the price. So what I'm looking for in today's candle, which is still forming, is for it to end looking something like this, basically. So we'd have a nice reversal off of that previous resistance, which is the standard deviation, the upper edge of it, as well as the potential horizontal resistance. You can see that there's previous support here. There's kind of zonal support as well that we've seen in the price. So that's why it's kind of having trouble getting through it now. But we need the candle to close first of all before making this decision. So should the price fail to move much higher than this and end something like this, or quite a toppy candle, then we've got the clear signs of bearishness in the 4 hourly as well. It's just the same move, in fact, just more contact points. Let's move this down. So you can see, when I say more contact points, you can see, look, it's that same support I was talking about, which was quite zonal, if you like, in the daily, but it's more specific on the 4 hourly because it actually comes down at a specific point and moves away. So this means that we've got reference for our stop loss above these levels, but what I would want to see is a candle close and then for these lower time frames to start to roll over. And by roll over, what I mean is the price starts to show lower lows and lower highs. So it starts to, you could do like a standard deviation on the price action, similar to what we've done here, high to low in this price movement. So between probably in tomorrow, I would suspect. But yeah, worth looking, obviously waiting for this to close and just looking for that lower time frame to show lower lows and lower highs as well. That could be a decent trade. But not today. Just wait and see how that materializes. This is Euro CHF. No, wouldn't be looking to trade this. Bearish, yes, but there's better stuff out there that has more potential. This 4 hourly is very, very messy, and there's no discernible signs of bearishness on this with low lows and lower highs as yet. So I'd pass on that one. Yeah, Euro GBP looks interesting. You can see again with our standard deviation how it's interacted in previous days almost perfectly with the upper edge of it. This bearishness here on the daily, in the 4 hourly is the same that we're seeing on the daily, just more contact points. What this needs really is for this lower time frame to start rolling over. So the hourly needs to stop producing higher highs and higher lows and break that previous support. So break previous higher lows, let's blow this up a bit, basically break previous support, start to make lower lows and then pull back. So that would give context to the standard deviation channel from this high to this low, and it would also have broken the price structure that we had previously seen that was quite bullish. So we're looking for more bearish movement really on these lower time frames, which would allow for a much a better time to entry. Stop loss above this previous high that we see on the daily. This high here outside the standard deviation. It's above these kind of support areas here, so it makes sense to have it above there. 1-to-1 reward to risk, depending on where the entry would be. It stacks up. So this would be a risk about 70 pips or so. 70 pips takes you way before this previous low here, so that stacks as a trade, but it's just about being patient, waiting for the right action to materialize. Euro JPY, no, bearish on this overall. Don't like where this price action is at the moment. It's still very still finding a lot of support at this previous areas here, and the stop loss, the most technical level for it, is above this previous lower high, and that would mean a very wide stop loss. So this here is about 300. Look, your stop's going to have to be way beyond 1-to-1. It's going to have to be way down here. So for that to happen, you're saying the price has to break a new low. It has to go into oversold area as well. Doesn't make sense. wait for this to pull back, find some value, then potentially look for shorts. This, no, bullish on this, but it's just in the middle here. It's kind of the mean of the standard deviation, or the average of the standard deviation. Want it to be nearer to this lower edge here to find value. So that's not going to happen this week. What else we got? So Prince OG is asking about news. Has there been a lot of news events this week? News, I'm not really bothered by non-format farmer payroll, to be honest, because of the way I trade. You can see that the position sizes I take are so wide in terms of the stop losses. These are swing trades, so they're not really affected by the kind of the short-term movements that you might see in a non-format payroll on a Friday. Sure, I might avoid entering a position around that time just because the spreads might be a bit wider, and there might be that additional volatility. But all in all, I'm not really phased by what the non-format payroll can do. I'm not typically entering positions on a Friday anyway, maybe holding them, but I'm not worried by what that extra volatility can do, because I'm protecting my capital with a much wider type of stop than a typical intraday trader might be trying to do. So those short-term volatility doesn't really have an impact on this type of trading. I hope that makes sense. So looking at Euro USD, bearish on this overall, although it needs to find some more value. This just needs to pull back, come nearer to our standard deviation upper edge, and so show some signs of reversal, which it's not doing at the moment, so wait on that. This here, no, I'll pass on this. This is quite choppy. You can see that in this move here, it's going to be, I could put a standard deviation around it, but I can tell you it just needs to find more value. It's in the middle here. It needs to come back, find support off of here before potentially going long. GBP CAD, no, I'll pass on this as well. Yeah, like I think I mentioned yesterday, it's just a bit too much of a limbo. This retrace has context. Look at yesterday's video, but basically this has context in terms of the downtrend with lower lows and lower highs, but this retrace is here is still within the standard deviation to potentially move much more higher. So it's just limbo. It could be one way or the other. So I'm gonna, pass. Why waste money? So this is a GBP CHF. This is a trade that I'm currently holding. It's in profit at the moment, so it's around £32 with a £100 risk. So my initial profit target, which I'm likely to move to another area depending on how the price action materializes, but I've got decent positioning on this. You can see we've got this bullish move here. Standard deviation has found kind of support, or the support had been found at standard deviation. There was previous horizontal support. I was a bit iffy about how significant that area of support was. I mean, there were zonal areas when we traced it back, but it wasn't great. It wasn't the best of support areas, but there was still context to it. It was roughly on a 38, what would that be? Yeah, it's a 38.2 retrace, even though it says 61.8. It's just the way that they work. Just change it around. It's all the same, but just in case you're more used to it this way. So here, it's more or less on the 38.2 retrace for the fib. So that helped with the decision. But really it was more the lower time frames here that helped warrant the entry. This price structure here had been broken, so we were seeing these lower lows, lower highs. It had pushed higher than that and then found support and started to move away. So this was enough context for me to at least risk 1% on this. So I've got 1% in this. I'm not sure if I'm going to scale into this at the moment. The main problem with this is this previous resistance that the price has kind of got to overcome. So this level here, it's got to break through this really for me to be more confident in adding to this position. But in doing that, it's probably going to hit the take profit anyway before it has a chance to pull back. So this probably is just going to be a 1-to-1 in terms of reward to risk if it hits it. But this area here is going to be a bit tricky to overcome. But I'm positioned well for it. Stops in a sensible place. So just see how that materializes. If that gets stopped out, not too worried because, you know, I've done my research as best I can on that. But we'll see how this materializes, and I'll get back to you tomorrow on that. Yeah. So next one here is GBP JPY. I'd probably leave this for today. It looks like it's breaking through support here. It could find support on the standard deviation channel. Just again going back to see how significant this is. It's previous highs, so it's quite zonal. So the price, let's just see what it's on fib retrace as well. No, it's not significant. Okay, so yeah, it's a wait and see. So should tomorrow the price find support and not move much lower than we're seeing it now, and give a type of reversal candle, then really it will be looking for the bullishness on these lower time frames. 4 hourly is looking pretty good at the moment. That looks odd. Okay, yeah, this looks okay at the moment, but these, like the hourly and the 15, these are well off showing any signs of bullishness. So we need to see higher highs, higher lows on this. So probably what we're on Thursday today. So that's probably into next week before that becomes tradable, in all likelihood. So pass on that for today. And again, if you're finding these videos useful, just give me a thumbs up. If there's something more specific you want to see in these, let me know. Or if anything that isn't making sense in the explanations, let me know. And I'll do my best to do that either now or in future videos. So GBP NZD. No, I wouldn't be looking to buy this at the moment. I'd be bullish on this overall, but I just want to. Can you see how far away it is from the standard deviation? Really, you've got a more probable trade if you've seen it find support off of the standard deviation. So you see a reversal candle off of the standard deviation, which also interacts with other kind of resistance or support. So if, for example, that we've got some nice areas of resistance here. If the price were to come down and show a reversal candle off of this level, we got multiple confirming things, right? It's support that is found on a horizontal level and on the standard deviation. When it's kind of floating in that area, it's just more of a risky type trade, even though it's still relatively bullish. Your positioning could be slightly off, so that you increase your risk unnecessarily. So I'd pass on that one. No, this one again is one of those ones where it's in limbo. GBP USD bearish overall in this bigger move, but this retrace that we've seen here still has context to the upside. It hasn't really definitively broken past these, broken lower past this kind of bullish standard deviation. So if I delete that, you can see this move here. Let's actually get rid of these horizontals as well. This move here still has context, so this could still move bullishly to attack these types of highs again. So to make this viable to short, what I'd want to see is it kind of more convincingly break these previous lows, this higher low here, move past it and then pull back. So GBP USD, no, I'd pass on that for now. NZD CAD bearish overall. Basically need to see a reversal candle. So the earliest that could be would be Friday to see the reversal. So the earliest you can see this would probably be Monday. And you can see how I'm just projecting really how something's tradable. I know that I need to see a reversal candle. This can't be a reversal candle. And this needs to close as well. So that's Thursday out. Friday, if Friday's candle is a very toppy candle, looks something like this, and then ends up on there, then that still needs to close. So that's Friday out the way. So the earliest that this would be even viable to trade would be Monday. And in that instance, yeah, we come back to that, see a reversal candle, and then look for the lower time frames to be showing bearishness. But that's one way you can kind of utilize your time better is by projecting. Excuse me. You don't waste time just looking at stuff that doesn't have a chance of materializing for, several days. I mean, as long as it takes me to, explain these one by one, when I'm going through and looking for opportunities, it doesn't take more than a few seconds to look at a chart. I'm literally, okay, yes or no, I'll be looking at this. I'd say immediately no, next, and then this, no, next, and then like that. So that's how your trading can be, just by, looking at the daily time frame and, not wasting time and energy digging down into stuff that is unlikely to materialize for several hours or days. Now, having said that, I do labour the point because it's probably better for your learning experience for me to explain what I'm seeing. But, the thought process is literally a few seconds, not as drawn out as, a 30-minute video. So, let's have a look at this one here. This, for me, is too oversold. Bearish overall, but it's hitting support. You can see here it's coming into support, needs to find value, pull back, allowing for a new lower high and a potential entry. So pass on that one. What we got? NZD USD again. It's next few days, this could be good. It's not right now. It needs to find some value. It's still a bit too expensive to short in terms of what the daily's saying. This needs to come back, find a reversal candle off of resistance, off of our standard deviation or previous level. These highs, these lows kind of match up, so that would be good, but it's not ready right now. No, this price action's crap for trading. It's just very sideways, very choppy, so there's no discernible trend. So pass. USD CHF, signs of bullishness in this move, but it's too overbought. We want it to be in this lower edge of our standard deviation channel. So to come back, find some value, show a reversal off of this level, and then potentially could be long on that. USD JPY. Yeah, interesting. I mean, it's come up, it's done this double top type move here, and it's moved away from it. It started to break through of this. What I had on there was just being aware of this bullishness. So this retrace, although this is bearish overall, this was a retrace that we're looking at, and this still kind of has context in the standard deviation. So this could still push forward, push higher, and continue with these higher highs and higher lows. But what it has done in today's is at least pierced it. It's not enough information yet, but what we want to see is that bearishness continue. So for it to break past these, let's just use this one. Break past these previous lows here, which would be more convincing in terms of this bearishness continuing. It would invalidate this kind of standard deviation from low to high and give more context from it to high to low as it moves lower. And in that instance, we're waiting for it to then pull back and look for an entry after seeing it pull back and hit resistance on our standard deviation and the price moving lower. But yeah, this one again, it's just another one in the works. It's just one to keep an eye out for. Not great right now. That's it. That's the entire market. So hopefully that's been of use. Again, if you find it useful, please just give me a thumbs up. If you've got any comments, feel free to leave those, and I'm happy to respond to those as well. Hope you found this useful, and I'll be back again tomorrow for Friday's trading day. So see you then. Take care. Bye.